Hello and welcome. This is Gordon De Silva from the award-winning firm Gordon's Knight, and I'm here to bring you my take on the Budget 2016, March 2016 with George Osbourne. I'm going to go through the bits that are relevant to clients more than just everything. So I'm going to skip over bits in our report. You will be able to download the report on our site, but if you prefer to listen to it or read it and watch it, then you can watch this video. Hello and welcome to part 3 of my budget report. On this budget report, we're going to be talking about capital taxes in this part 3. Remember, part 1 and 2 are available for you if you want to watch those, listen to those. We're going to be talking about capital tax rates in this one, and capital gains tax, entrepreneurs relief, as well as maybe interest-free elements that are around, and stamp duty, land tax, which is important for all our property clients. So let's get started. So the first thing we want to look at is capital taxes. Capital gains tax, this is a beauty, dropping down from 18 to 10% and from 28 to 20%. So those of us in businesses who hold commercial property, those of us who have shares, those of us who buy assets to sell at a profit later on, are going to notice a significant reduction in capital gains tax. Now, this is a little bit crazy to me. Coming from a conservative government, it's not surprising, but in this political environment and this economic environment, to give wealthy people like us such a big giveaway when they're taking money from less wealthy people just seems to be a crazy idea. I'm glad it's happened, but yes, we'll benefit. There's lots of areas we've talked about that we're going to lose out on, like dividends and stuff. But this one is one of the things we are going to win on, and fantastic. So, however, the 18% and 28% for basic rate taxpayers and higher rate taxpayers remain at 18 and 28% for residential property sales and gains. So unfortunately, I was thinking, when I heard the news at the beginning, I was thinking, I could sort of start moving my portfolio around. And then I heard this last bit. I thought, maybe I won't. But it's part of the planning point. We have some plans. If you're into property and you've got a portfolio, please talk to us. There's some very interesting planning we've got in place that can help. There's so many rules changing for property. There's going to be interest rate restrictions. There's going to be stamp duty, land tax. We'll talk about in a minute. There's going to be things that are going to affect our profitability and our tax on our property business, and so we need to watch out for that. There's been no change on inheritance tax, which stays at 325, although there is an additional late band which will be available from 17, where the main residence is left to direct descendants. Like if you leave your main residence to your children, I think there'll be a distinction of what the direct descendants are. Then you get an additional nil band which will be available. And of course, remember, there is this husband and wife transfers. You get double the amount, 325 times 2 between husband and wife. So it's effectively £650,000 for husband and wife transfers. Before death or on death. Any additional relief will be protected where the person downsizes to a less valuable property from, I think it was last year. They were talking about this last year, so they dated it 8 July. If you'd like any discussions on inheritance tax. Now, many clients will look at inheritance tax as, well, look, I'm 30, 40, 50, I'm young, I don't need to worry about inheritance tax. It's probably not for you. It's probably going to be for your parents. In my generation, it's probably not so much for me, but for my parents, who would probably need more inheritance tax planning. Now, why should they care about inheritance tax planning necessarily? Because they're not going to be the beneficiaries. You are. You as their sibling, as their children, will be the beneficiary. So it's probably down to you to talk to them about, what plans they've got if their estates are significant to minimize the inheritance tax hit. It has been described many times that inheritance tax is one of the voluntary taxes in the UK. And that is because if you plan your affairs right, you could not pay inheritance tax. And, you will notice very wealthy people, including, while I'm recording this, Mr. Goldsmith is running for mayor. He comes from a very, very wealthy background. And his family, I suspect, will not be paying inheritance tax because they've taken their wealth and put them offshore. They've put them into trust. I think he was talking on a TV program saying they're in a trust in Switzerland, and he gets a payout from that trust every year, and he pays tax in the UK on that. But the main wealth, the millions and millions of pounds, are safely squirreled away from the taxman. Taxman can't get it on death or in any other way either, I suspect. So keep an eye on, there is planning. If the amounts are significant, you owe it to yourself and your family to protect it from the state, because the state will take it. Now, of course, if your parents want to give it to charity or somebody else, then obviously they're prerogative, but if they don't want you as a family to have it, then you owe it to yourself to plan for it. Okay, so I'll leave that there. There have been some changes to capital gains tax entrepreneurs relief. The entrepreneurs relief will be extended to external investors. Up to now has been internal investors. Now external investors will also be able to apply the 10% rate of capital gains tax, but only on the disposal of ordinary shares held, and they must have subscribed for the shares for consideration after March 16 budget day, and they would have bought new shares and put the money into the company. It's not buying it from somewhere else. So they've got to be injecting money into a business. And the shares will have to be held for at least 3 years from April 16, and there will be a lifetime cap of 10 million. That's a big amount, right? That small business would have to be doing some serious good stuff to be worth 10 million, which is fantastic. You can see their share is 10 million. In the 2014 autumn statement, it was said that we could not claim capital gains tax on entrepreneurs relief against gains arising from the sale after 3rd December of goodwill by a sole trader or partnership to a limited company in which they had a controlling interest. Now, we had a load of clients in the past 7, 8 years, 9 years go through this process, and they saved, let's just put it this way, a very significant amount of tax by using this planning. And nothing lasts forever. A whole load of new people came into the market offering it to everyone and sundry, and as a result, the revenue closed down. All of these things change as more and more people get into the market. The revenue closes them down, and so this is now closed. So new planning will be considered next, and it's a moving feast, right? And we're always looking for the next thing to help our clients, because typically our clients are marked by people who want to have control of their own destiny. They want to earn more money. They want a better quality of life. They want a better quality of security for themselves and their family. They want to go on nice holidays. They want to own a nice home. They want to own a nice vehicle. Some of those things are not what float my boat, but a lot of people want that. They also want to earn more than they need so they can put money away for security, for this rainy day, for family events, for retirement, all that sort of thing. So there's a whole range of things, right, that we want to do. And it's important that we look to save as much tax as possible, because tax is just like another expense. It saps wealth, and it needs to be managed. Now, I don't focus on tax saving. It's not my main focus. My main focus is on income increasing, margin increasing, cash flow improvement, value enhancing, time limiting, balance effectiveness. That's my main focus in business. But if we can save tax as well, why not, right? Why not indeed? That's what it's there for. It's there to be planned. although you would believe by the rhetoric with the revenue and the government and the general public that, let's tax business people to the hilt because they're bad. We're the people, who work really hard. We get up earlier than most people. We work harder than most people. We think harder than most people. We create more jobs than most people. And we create more wealth in the UK than most everything else, which is why the chancellors recognize that. But yet they keep on hitting us with red tape and, I'm going on a rant again. But red tape, higher taxes. It's about time they gave us a break, and here they have given us a bit of a break. Because they've reduced corporation tax by 1%, not from now, but from next year, April 17, corporation tax reduced to 19% and then 17% from 2020. There are also some notices I haven't put in here, but certain small businesses will be exempt from small business rates, so that's all cool. He's recognizing a bit, but he's taking big chunks with one hand and giving small bits in another, right? So let's take what we can get. And what else have we got? We've talked about stamp duty land tax. So we got rules for calculating stamp duty land tax are changing for purchases of non-residential properties, just to come in line with the new rules on residential properties, where they involve a mixture of residential and non-residential property. But like this is where you have an office, or a shop underneath, and flats above. We're just about to change our office to office and flats, because being more and more and more virtual, most of our team work from home. We need less and less team in the office. And so now we've got, typically we turn up when we have a meeting, and the office is there if people want to come in. But most people now do things by scanning and email and telephone and online meetings. And I go and visit people. And so, but those type of properties are now going to have a slightly different stamp duty land tax, SDLT, on it. March 16 will be charged on each rate of the portion of the purchase price. So there are certain bands. I'm not going to go through them in detail because it's dealt with on an individual basis. But just bear in mind there's a table on our report that you can look at. But obviously when time comes and it affects you directly, let us know and we'll get involved with planning it for you. And no doubt your lawyers will do the same. There is also a little tax relief on small donations to charities, and there's been some rules which, in the past, these tins they collect a little donation boxes. They could never claim gift aid on it. Now, gift aid, if you make a personal contribution to a charity, they can claim almost a third more as a result of your donation. So you pay, £1,000 into a charity, they could, under gift aid, they would be able to collect another £280, which really helps their bank account and to support the good causes that they do. Now there is some rules. I'm not going to go through them. Our charities will be aware of this now, and they're increasing from £5,000 to £8,000, where they can say the money in the box has qualified for gift aid. Because most people who give money to charity, a good suggest, because most people are employed, would almost certainly be employed and have paid tax on the money they're giving. And so, it's not a big leap to go, well, let's just call it, taxed income and we can give the tax back to the charity. So, that's quite nice for community amateur sports clubs and other small charities, which is good. GASDS, GASDS, is this Gift Aid Small Donation Scheme. Interesting little abbreviation there. At the end of that, there's a little diary of events. I'm not going to go into that, but you can see that on the report. It's this month's, but if next month is just going to move on. Just remember, corporation tax is payable 9 months and 1 day after the first 12 months of your period. So now if your year end is 30th June 15 or earlier, you've got to be paying your corporation tax on the 1st of April if it's June. And if it's earlier than June, then you should have already paid it, because you're going to now get charged interest, and you may even get a knock on the door. So make sure you pay that straight away. 6th of April, a new tax year begins. Strange date, every other country in the world, I believe, has a tax date of the end of the month of December, June or something. We've got 6th of April. Fantastic. Just adds a little bit of complication just to make things a little bit harder. Why not? 19th April, the final RTI. Now, if you're running payroll, if we're running for you, we've got a tiny window. 19th April is when you've got to file your last RTI. That is tight. There's 6 questions to answer, or 7 questions to answer about, do you consider yourself a personal service company, and did you pay anyone in cash, and did anyone else pay your employees, all that sort of stuff. They need to be answered fast, okay? Because now we haven't got the benefit of months, we've got the benefit of days. So what the revenue take away, they give it, and here they're taking away lots of time allowance from our clients. Again, 19th April, the tax and national insurance and CIS must be paid by 19th April for the 5th of April month end. Again, 5th of April, nice date, nice and round. And if you're paying it electronically, you can pay it by the 22nd of April. If it's a large amount, just remember, we've had a couple of clients get caught out on tax payments. If it's a large amount, sometimes the bank doesn't transfer it the same day. It takes 2 days, 3 days, and you can miss the payment date, get a penalty. Horrible penalties are everywhere right now. We live in very risky, dangerous times for missing anything or paying anything late. And of course, 1st May is coming up a little while away. Corporation tax for the year 31st July 15 will be payable. So if that's your year end, remember, if you're a client, you've already got emails from us telling you when we did your accounts when the tax is payable, reminding you to put it in your calendar, and you'll get another email just to remind you again. But it should be in your calendar, it should be on your email. Please get these payments in on time, because it will only cause you hassle. And if the bank is only paying you 0.5%, 1%, 1.5%, the extra, if you pay it 30 days early, it's probably better than missing it because something goes wrong. Just the other day, I was away in Thailand on holiday, and my device that allowed me to make bill payments failed. And I had told the bank I need a new one because the battery looked like it was failing, and it failed. And I was away, and I was 4,000 miles away or whatever, a different time zone, and I couldn't make certain payments. Now, had they been a tax payment, I would have been in penalty situation because I just couldn't pay it in time. Fortunately, it wasn't one of those, and I talked to the people I owed money to, and they said, look, it's no problem. When you get back, just sort it out, which I obviously did. But it is, things can happen. So why not just pay it a bit earlier? It costs you virtually nothing in lost interest these days, and it's all done. Anyway, therein is my 3-part analysis of the budget with my rants and passion and advice and and everything else that goes with it. Hopefully you found it useful, engaging. If you liked it, please tell me you liked it, because I don't intend doing this again unless at least a dozen people tell me they found it useful. If no one writes to me and says, I listened to your budget analysis, and it was quite enjoyed listening to it rather than just reading the report, then I will never do one of these again. I'll just put the report up and you guys can grab it and read it yourselves. If you feel the analysis is a little bit better with a bit of commentary and my excitement put in, then by all means say some nice things about it, and I'll do one again next year. I look forward to speaking to you. Let's do some tax planning before the 5th of April. If you are one of our management clients, premier clients, or profit multiplier program clients, make sure we're in the calendar. Keep your diary date locked in for us so that we get that meeting in so that we can save you tax, because if we don't vote the dividend in time, it is deemed to have not been voted and you will end up paying 7.5% more tax 4 weeks from now. Please take that seriously. I wish you every success in business. You deserve it. You are my favorite people. You take care of yourselves. I'm going now to have a cold glass of water. It's been a thirsty job, this. Take care. Goodbye.